fellow traders, 'tis I, the rumpled one. The signal and the noise, why so many predictions fail but some don't, by Nate Silver. Fellow traders, be a great idea if you read this book. You might get some insights into trading. Let me share a few passages with you. And this book is very recent. It was just published last year, 2012. So let's turn to page 313. And this is in the chapter about poker called The Poker Bubble. Sometimes, however, it is not so much how good your predictions are in an absolute sense that matters, but how good they are relative to the competition. In poker, you can make 95% of your decisions correctly and still lose your shirt at a table full of players who are making the right move 99% of the time. Likewise, beating the stock market requires outpredicting teams of investors in fancy suits with MBAs from Ivy League schools who are paid seven-figure salaries and who have state-of-the-art computer systems at their disposal. So my fellow stock traders, we're up against some stiff competition. And you have to wonder why we even attempt it. What do we think we have that these guys don't? I mean, he makes the case in this book that it's almost crazy to try and beat the market. He says some people can, but over the long haul, most traders fail. Now let's move on to page 382. This is in the chapter about climate change. In fact, I found some of the best quotes or best passages in this book to relate to trading in this chapter. I'm going to dive right in on page 382. Said next, they say the complexity of the global warming problem makes forecasting a fool's errand. There's been no case in history where we've had a complex thing with lots of variables and lots of uncertainty where people have been able to make econometric models or any complex models work, Armstrong told me. The more complex you make the model, the worse the forecast gets. Now, I know some of you may have seen the thread I started. I started it actually on a few forums, but I think it's been deleted on maybe all but one. Charts on drugs, where the trader has put so many indicators on the chart, you can't see the price anymore. It's just a bunch of squiggly lines and shading and who knows what else, arrows, that just make it so complex. And so what this paragraph tells me is that it really is a fool's errand trying to make these forecasts and predictions. And he points out the distinction between prediction and forecast. When you predict, you're saying something in a definite matter. For example, it will rain tomorrow. That means I'm either going to be right or I'm going to be wrong. And when I make that prediction, I'm almost eliminating any other possibility, any other outcome. I predict. On the other hand, if I say there's a 75% chance of rain tomorrow, that's a forecast, because I'm allowing that 25% at a time I may be wrong. Because based on the inputs and the evidence and the observations and the analysis that I've made, I think there's a 75% chance this is what's going to happen versus a 25% chance that something else may happen. So that's something to consider when you're making trades in the market. Are you making a prediction or are you forecasting? And is the whole thing just too complex? Are you just making a fool of yourself in the process? Now, same chapter, page 384. Some members of a group may be more influential because of their charisma or status, and not necessarily because they have the better idea. Empirical studies of consensus-driven predictions have found mixed results, in contrast to a process wherein individual members of a group submit independent forecasts and those are averaged or aggregated together, which can almost always be counted on to improve predictive accuracy. So in other words, I guess what he's saying is that, some people are a little more powerful and they yell maybe a little bit louder, they beat their chest and they say, hey, this is what's going to happen. And they drown out all others. That happens a lot on forums. Trading forums, that is. Still in the same chapter, page 388. The goal of any predictive model is to capture as much signal as possible and as little noise as possible. Striking the right balance is not always so easy, and our ability to do so will be dictated by the strength of the theory and the quality and quantity of the data. In economic forecasting, the data is very poor and the theory is weak. Hence Armstrong's argument that the more complex you make the model, the worse the forecast gets. Once again, signal versus noise. I'm going to do another video about signal and noise in the market. But, I'm sure you've seen some of those squiggly line indicators that they talk about signals. But, once again, they usually try and do some kind of back testing as opposed to more statistical analysis like frequency distributions. And they give you no forecast. They just say, well, here's the signal, enter the trade. But what's the forecast? What's the chance of winning versus losing? It's not 50-50. On the next page, 389. An admonition like, the more complex you make the model, the worse the forecast gets, is equivalent to saying, never add too much salt to the recipe. How much complexity, how much salt did you begin with? If you want to get good at forecasting, you'll need to immerse yourself in the craft and trust your own taste buds. That's why I've been saying for years is trade what you see. People want to see what I see. No, trade what you see. Because you can look at the chart and see something entirely different from what I see. Because we all have biases. Some of us may even be colorblind. Some of us might have something else. Some of us are more analytical. Some are just a lot more simpler and they just see boxes and lines. Because a lot of times you look at these charts and you see resistance. You see supply and demand. You see trend. But those things aren't on the chart. That's your interpretation. And it's really important you distinguish between the two, especially when your money's on the line. So, once again, the name of the book is The Signal and the Noise, Why So Many Predictions Fail But Some Don't, by Nate Silver. Fellow traders, I highly recommend you read this book. Read all the chapters, not just a chapter about markets. And as always, it's not what you trade, it's how you trade it.